Welcome everyone to our deposit compliance question and answer forum. My name's Jared Moyer. I'm going to be one of the hosts during the program here today. My co-host is going to be Diane Dean. She's going to be playing the role of moderator. I guess I get to try and answer the questions. She's going to take the hard ones today. It's not the only two folks from our team, though, that are helping make this happen today. We've got Kyla Kroger and Amy Kudlachik. They're behind the chat function in the Zoom control panel. Kyla's going to help out with your experience, audio, visual, technology, links. If you want to test drive one of our products, reach out to her. Amy Kudlachik is going to kind of play control, make sure things are going where they need to. She'll share with you some things about additional solutions. So if we're taking a Reg-E question, she might flash up a Reg-E webinar. If you're like, gosh, I'm hungry, I want more of that. And she'll do that as we go through the program. So pay attention to the chat. We also are going to take questions. That's what this thing's all about today. We have many of you, in fact, I want to say 1,400 different institutions or 1,400 different registrations across the country. Not sure how many people are going to show up live. We're already at 6:30 and counting. There's a lot of people here today, folks, and a lot of you took advantage to pre-submit questions. We're going to mix it up, and we're going to take some pre-submitted. We're going to take some live, but we only got an hour, and I'm wasting it up here to start. So we're going to get to it as soon as I can here in a moment. We're going to get to as many as we can. That's what it comes down to. And it's going to be kind of random what we do here today. So get those questions submitted. You can use the Q&A button in the Zoom control panel. Those will go to Diana. And again, kind of random what we're going to take during the program here today. With that, the agenda to get to as many of your questions as we can in the next 60 minutes. And then I've got a couple of notes as we close out the program here today. What I'm going to do is I'm going to shut off the screen sharing here. And Diane, the mic is yours. You're running the show from here out, and I'll try to answer the questions.
Okay, well, we will start on the topic of electronic funds transfers.
Of
Are,
course.
are other banks pushing liability back to business customers if they have an unauthorized electronic funds transfer? And if financial institutions are taking on some liability, how much time does the business have to notify the institution after a statement is received?
Yeah, I don't know that I have a real consistent answer on that one. I think it's kind of all over the place. I mean, think about it. Some of your best customers are likely your business customers, and you're going to probably do everything you can in certain circumstances to take care of them. And so in this cases, you're probably going to take on some liability. Remember, Reg-E, and maybe I should have led with this, Reg-E doesn't apply to non-consumer accounts. There are some financial institutions that choose to hand to their non-consumer accounts a Reg-E disclosure. Well, then you should do what you say and say what you do. I wouldn't do that. But that being said, you still want to take care of your best customers. And my guess is that your terms and conditions document, whatever that is, outlines what you're going to be liable for, what they're going to be liable to a certain extent. It comes down to contract law rather than Reg E, since they're not subject to Reg E.
And staying right there on that topic
Okay.
from a customer service stance, if we change our practice with regards to our business customers, does this trigger any kind of need for an advance notice?
Okay, so again, we're talking about business customers. So Reg E, we're not going to have the 21-day advance change in terms that is required under Reg E for Reg E covered accounts. It's going to come back to what did your terms and conditions say? What did your contract say with respect to that particular account?
Okay, we'll move to Reg CC. If we suspect a check may be fraudulent because it is extremely unusual for a customer and out of their typical transaction pattern, is that a sufficient reason to place a reasonable doubt hold?
All right, well, we're going to put the brakes on Reg CC here just for a moment. And I know that we're talking deposit compliance Q&A here today. We've got an AML CFT coming up in July, but that's immediately where my mind went on this. When you talk about suspicious and out of the ordinary, not normal for that customer, make sure you get your BSA AML superstars involved so that they can do what they've got to do when it comes to their responsibilities. Now, back to Reg CC. Sure, it's going to be based on facts and circumstances. And there's a lot of things in compliance we say, be consistent, be consistent. Every one of these is a little bit different, right? For the most part. And so that's going to take and be part of whatever the outcome is relative to what's been put in front of you.
How about does the degree of suspicion make a difference? For example, if they tell us that the check is payment for a work at home opportunity or some other typical scam, and they clarify they realize they can just refuse to accept the deposit, but they struggle with doing so.
Yeah, it's certainly the degree of suspiciousness. And again, go back to scenarios are going to be different. Facts and circumstances for each are going to be different. So yeah, not everyone's going to be built and look the same. So the outcome and how you got there could be different along the way.
Under the Truth and Savings Act, if a customer changes from one deposit product to another, are we required to retain the updated disclosure that was provided?
So Reg DD has a 2-year record retention. Now, I mean, Diana, if you're the customer and I give you this truth and savings disclosure, do I have to keep a copy of the one I gave you? No, I have to keep a copy of the one that is relative to that account that you opened up. And so I've got to keep that for 2 years. It doesn't need to be paper, it can be electronic if those accounts haven't changed. It could just be I print a new one. If they have changed, you'd want to save that somewhere and have a timestamp on it that this is the disclosure for this time period in case you're ever asked in meeting that 2-year requirement.
Well, we have some Reg CC changes coming up, and
We
someone's
do.
wondering, do you have a sample of the wording that could be added to our statements for notice to customers to comply with those upcoming changes?
Well, I don't have it off the top of my head, but I know who has the information. She's already shared it. So Diane, I believe you and Amy for our magazine is it the coming month. We've got an article that is going to be all about this Reg CC change that's coming a little bit later this year. And in there, we share the model language, or not model language, for our recommended language for that change in terms, like a statement message or a statement stuffer, if you will. And so we're going to share that with all of you. But Doogie, that's exactly the kind of thing that we put in that written word on compliance each and every month, the Banking on BCC publication. And if you want a sample of that entire publication, try it out. We've got over 320 different institutions across the country that get that. Do me a favor, chat with Kyla. She'll hook you up with a complimentary version of that Banking on BCC magazine. But the sample wording you're looking for, Amy has chatted that in the chat function in the Zoom control panel.
Under Regulation E, are business customers eligible for provisional credit?
Okay, so the question that came in earlier, Reg E does not apply to business accounts. There are some banks that choose to give them Reg E disclosures. That's fine. You can do that. You can, bring more to the table than what are necessarily allowed to be or required to be at the table. If you've given those disclosures, you should do what you say and say what you do. But if you haven't given them Reg E protections by way of disclosures, therefore you don't have to follow that, then the provisional credit requirements would not apply to your non-consumer accounts. Now, you should have outlined somehow, some way in your contract. Okay, this would be contract law or possibly state law, not Reg E, how you're going to handle these situations. You say you're going to give them some sort of walking around money. That's what we call provisional credit. That's our plain English on it. Then you need to do that. Okay, if you haven't spelled out how you're going to do it and you're kind of just making it up as you go, I'd encourage you to come up with some sort of consistency with or a roadmap for how you're going to handle those non-Reg E, so business accounts that are part of all of the fraud and unauthorized transactions that are going on out in the world.
Regarding the Reg CC threshold changes effective July 1st, do we need to send a mass mailing to affected customers at least 30 days before the effective date?
Yeah, so I wish these regs were all kind of similar, right? They're different. It's why we have jobs and get to. I tell my wife all the time, I wish I knew cooler things. Some of you've probably heard that before. So there are certain things that have to be 30 days ahead, or unless you're talking about Reg E, 21 days ahead. Okay. Reg CC says, well, unless it's adverse to the customer, you don't have to do it until I'm sorry, you don't have to do it 30 days ahead. You have to do it within 30 days of the change. So you can make the change, and as long as you tell them within the next 30 days, you're okay. Many institutions are choosing to do this ahead of time, even though it's not adverse. Because remember, why isn't it adverse? You're giving them more money up front. You're making more available, so it's not an adverse impact on your customers. So the reg is no later than 30 days after, but you can do it sooner than that.
Well, another area where we've seen changes in connection with the FDIC signage. How about on a social media post? Can we put member FDIC to be one click away?
Yeah, I'm sorry. There's some things, Reg DD, Truth in Lending, Reg Z, that have some one click away options. The FDIC signage, whether it's the advertising statement or whether it's the new official digital sign that's coming down the road, there's no one click away options for that. You're not okay. So it's got to be right there in front of them.
How about a banker who takes a deposit at their desk and walks it over to the teller line? Do they need to have member FDIC sign on their desk?
So there's a Q&A, and I don't know the number of it off the top of my head, but if you go out to the FDIC's website, there's a Q&A that specifically addresses this, that, if Diane walks in, and I don't traditionally take deposits at my desk because I don't have any signage here, but I say, oh, Diane, let me help you out with that. And I walk Diane or walk the deposit to the teller line, then I don't necessarily need to have the FDIC signage in my office. That's not a deposit taking area then if I walk it to the teller line.
How about an on hold message for people calling our customer service area? Does each message need member FDIC?
Oh, been a while since I've been asked this one. So I don't recall there's anything specific in the regulation about when I call the bank and I get put on hold and there's these ongoing, I'm going to call them advertisements because that's what they are, right? I mean, we're the best bank in town. Come get this, come get that, right? I've seen people in the past say, every 30 seconds. That's not hard and fast. Maybe it's at the end of each product. Hey, we've got the best checking account. Here's all about it. And then when that's done, maybe you say, member FDIC. And then you're on to the next product. Hey, we've got the best loans. And then at the end of that, member FDIC. There's no rules for this, but there's no exclusion either. So I would have it somewhere in there and then periodically.
What is your take on where we stand with overdrafts right now?
Oh boy, I so the large bank overdraft rule, there was a joint resolution to kill that, right? And so the House and the Senate, they both got that done. They only need majorities in both. There's special rules for how that happens. And so that got done. It's been sitting on President Trump's desk. Now, we've heard he says he's going to sign it. He has not signed it yet. I think there's every intention to sign that thing. So it's going to kill that large bank overdraft rule. Where does that leave everyone else? Well, they're rolling back CFPB oversight and all of the things that have trickled down in overdrafts in the last 4 years. That's kind of going to go by the wayside. Now, does that mean we should ignore overdrafts and it's, hey, we're back to charging people? Now, I'm all for when people don't have the money and they buy the stuff that they get, there's a penalty for that. There should be. But it doesn't mean we should ignore everything that's happened in the last, 5, 6, 7, 8 years, whatever. It's still going to come down to the courts. And so you're not going to get away from class action lawsuits. They will still be there. And the precedent that was set in the last 4 years and even before that, that's not going away either. Some of the guidance might, but not what's happened and played out in the courts. So we still have risk when it comes to overdrafts and what's been done and what will be done going forward. We're just not going to have things being shouted from the top of the CFPB mountain. That's what's going to change. The risk is really going to reside within the states and then when it in the courts as it relates to the risk associated with overdraft. So I wouldn't completely ignore it.
Under Regulation DD is a change in tiers, such as by adding an additional tier, anything that would require advance notice.
Okay, this one's a little deeper. Maybe. Why do I say maybe? Because there's a thing in Reg DDs that says you've got to provide notice, and if it's adverse, it's got to be 30 days ahead. There's a scenario where I have an untiered account where they're just getting the rate for whatever in the account today, and we say, all right, that rate stays, but if they would happen to bring in more money at a later date, okay, they might have tiers that are better if they have a higher balance. That would be beneficial to the customer if they brought more money in to get more interest back if they were able to have a higher balance. So in that case, I would say you wouldn't need a 30-day advance, but let's change it up. Let's say I've got money in the bank and it would be and if we went from one tier where I'm at, okay, one rate, now there's a tier above and a tier below. So if I drop my balance, I go down to a lesser tier, then that would be potentially adverse to the customer. So it depends on how you're going to structure the going from a single rate to a tiered structure.
Back to those FDIC signs. If an ATM does not take deposits, is it required to display the official sign?
Okay, so there are no old rules, okay, where we came from, and there are no new rules for ATMs that don't take deposits. Now, so where does that leave us? You technically don't have to have the old official, the gold and black 7x3, and even a smaller version of that never technically had to be on the ATM machine. A lot of banks have them there. That's fine. You can have them, okay, but they didn't have to be there in the first place. Moving forward, the only time you have to have a sign that's associated with your ATM is one that takes deposits. Okay, and I forget the time frame, but if you have an ATM that takes deposits and it's a current ATM, you can have the official sign, the 7x3 or a modified version of it. After a certain date, you have to use the official digital sign. Now, that's all subject to whatever happens down the line because there's some changes blowing in the wind. There's a reason there's a delay, and they're looking to potentially rewrite some of that. The people who wrote the last change, they're gone. We have new people in charge at the FDIC, and so that whole thing is kind of in question right now. I know you spent a lot of money and done a lot of work to get to where you're at. That whole thing could be unraveled, and that isn't necessarily easier. Okay, that could be more difficult to unravel some things. So we'll see where things go.
How about if customers have the ability to transfer between deposit accounts? Is that considered a deposit?
Okay, so if we're talking, since we just talked about ATMs, if we're talking about ATMs, the ability to transfer from one account to the next, that's not a deposit taking ATM. A deposit taking ATM is I go to the machine and I put money in it and it puts it into my account. Okay, that's going to trigger all the FDIC signage. If we're talking about I go online, so I got my computer screen in front of me like you, or I go on my mobile phone here and I go to my mobile banking and I can transfer funds between accounts. Hey, maybe I can't make a deposit, like take a picture, like mobile deposit or something like that, but I can transfer money from this account to that account at your bank. That's a digital deposit taking channel. And then that would trigger the FDIC digital sign requirements as that rule's written today.
Under Regulation E, if we have a customer who is constantly doing disputes, are we okay to close their debit card or account?
Yeah, it's a privilege to have a debit card, not a right. And so pop that card, shut it off. You can tell them, sorry, you're not handling this the way you should. We're not gonna let you have a card. And if it continues, you have every right to kick them to the curb too. I've had that. Had a lot of banks go, really? Yeah, you can do that. Now you don't want to be spreading that around, right? That you kick people to the curb, but when they don't handle things as they're supposed to, you don't have to take that continued liability on.
And this one, I believe, is specific to the FDIC signage again. If a banker does both loans and offering credit life insurance and opens deposit accounts, what signage is required?
Well, I'm trying to write the notes down. So what was they make loans, they
And
take deposits.
yep, and they specify that with those loans, they're also offering credit life
Okay, I see where
insurance.
this is going. Okay, so loans are not defined as a non-deposit product. They're actually excluded. Now, the rules state that you can't commingle areas where we've got deposits and non-deposit products happening. They can't happen in the same place absent physical limitations, which is going to be very subjective, right? And so here's what this comes down to. You're making loans, but you offer credit, life, and disability. So that's a type of insurance. So is that a non-deposit product? Well, they actually came out with a Q&A that said, all right, if you're making loans and you're offering credit, life, and disability, yeah, that's a loan product. That's not a non-deposit product, and therefore it doesn't trigger the non-deposit product signage, the mere offering of credit, life, and disability insurance and the selling of it. But in this scenario, what's happening is we're making loans and taking deposits. So the credit, life, and disability is not going to trigger the non-deposit signage, which means we can take deposits in this office if we have the official FDIC signage. Now, if we do some other non-deposit product in that office, maybe we sell homeowners insurance, car insurance, something like that, then we can't take deposits in that office because we have to have the non-deposit product sign, and we can't have the FDIC sign and the non-deposit product sign all in the same place, absent physical limitations, which are subjective. Next question.
How about how about the FDIC advertising symbol on clothing, such as polos, vests, hats, for our employees only to wear to work or if they go to conferences or meetings? Is it required?
Okay, so there's a thing in the FDIC's official advertising statement rules that says, and help me, maybe you know the wording a little better than I do, Diane, but where like pens and you uh, card stock, things like that, where it's too small. Um, if the logo is super small on a piece of clothing, yeah, it probably doesn't need to be there. But if it's your big old emblem on a hat, it probably technically needs to be there because it's not excluded anywhere. So our general rule of thumb when you call us is going to be it should be it should be provided everywhere unless otherwise specifically excluded. Clothing is not one of the exclusions that's outright designated in the listing. There are arguments to be made though, and I've seen a whole lot of clothes out there, hats, shirts, whatever, that don't have member FDIC. And I don't know that I've really seen anybody written up because the examiner passed somebody walking down the sidewalk wearing the ABC bank hat and they didn't have member FDIC, or that they pulled the customer over and said, let me examine your hat. I've not seen that. So I think you're good.
How about a customer filed a Reg E dispute for approximately 14,000 in transactions to an online gaming site? Originally, the customer said they did not authorize the charges, but now claims they authorized some, unable to remember which ones. Since the customer cannot say exactly which ones they authorized or did not, where does this stand under Reg E?
So it's that last part that's going to be important. I'm going to circle back to it in a minute. May need your help, Diane. So the first part of the question, it made it sound like they've filed a dispute saying this or that or those aren't mine. And as we work through the investigation, we're going, well, this looks like that. And how could, and the bank's struggling to figure out why these ones are and these ones aren't. And so we reach back out to the customer, and the customer's like, well, I did do some of them, but not all of them. And I don't know which ones I did. We're really going to be in a tough spot here as far as trying to figure this out. And so without the customer giving us some sort of indication on how to determine which ones are or are not, this becomes really tough. It's going to be very subjective. I've seen banks here go, well, it looks, you're claiming that you've done most of these and you have no way to show which ones you didn't. So we don't know which ones to investigate. And so until we can get that, we're going to say it's on you. You're given some flexibility in Reg E. There is some there is some discretion where you get to say, nope, this is our ground, this is where we're standing. Examiner might not agree with you, but there's no required restitution, reimbursement, if you will, in Reg E. Now, in the past, we've seen them couple that with UDAP, but for the next 3.5 years, I'm not going to say that there's going to be a whole lot of that going on. So I think your ground's a little better right now.
How about those FDIC policies and procedures? Can you give your thoughts on how detailed they need to be?
I'm going to do you one better because I thought maybe we'd have some FDIC questions here. I guess I didn't print that out. Amy, I believe we have a sample policy and procedure. And so I'm going to recommend that you all take a look at that if you don't have one. If you got one that's better, great, run with it. If you're like, gosh, I'm struggling with what this should have, or we put something together and you want to cross-check it against ours, please do that. But our team's going to share that with all of you. And by the way, all of our resources we make available as far as tools like this, they're free out on our website. You simply have to be registered on our website. Doesn't cost anything. And we've got a deposit bucket, a lending bucket, a miscellaneous bucket, and a BSA AML bucket. Make sure you take advantage of those free tools out there. I did print this out because I thought somebody might ask. The policy and procedures as it relates to FDIC, they have to be commensurate with your bank's size, complexity, scope, your risk. And so there's not a one size fits all. Now, we can give you a skeleton, say you've got to put the flesh on it as to how you do things as it relates to deposit taking activities, digital deposit taking channels, and all that. It has to represent you and how you're doing things. But this will give you a start or something to compare to, measure up against.
Will this FDIC policy need to be approved annually?
Policies don't have to get approved annually in general. That off the top of my head, there may be something of this one doesn't. You have to go. I mean, it says policy, and when I think policy, if you've ever been through our CMS compliance management systems training, which by the way, we've got a 6-part series going on right now. We just finished part 5. You can still catch that, or you can go get it on demand. But anyway, policies are board of director level. Okay, they should be approving it. Should slide by their desk. Procedures, they should see them, make sure they're in line with their policies, but they should be approved by management. Okay, because we don't train board members at the procedure level. We train them at the board level. If you're asking your board to approve procedures, then I'm going to ask you where your training is at the procedural level for your board. And all your board members go, wait a minute, we don't want that. So keep them separate. But no, they don't need to go before the board every year.
On a Reg E dispute, I know we cannot require a police report, but can we request one? And similarly, can we encourage customers to talk with the merchant?
Well, I want you to be careful with the word request because I think that's subjective. Can you ask if they've been to the police or if they filed a police report? Sure, you can ask. Can you ask if they've been to the merchant? Sure, you can ask. But in no way, shape can these hold up your investigation. As soon as they say not mine, your investigation starts. And then you can say, yeah, Diane, have you been to the police by chance? Have you any information you can share with us there? Have you been to the merchant? Any information you can share with us there? But you can't make Diane think that she's got to go to the merchant or go to the police or both before you'll start your process.
You touched on that digital sign under the FDIC rule. Do you know if the intent of the delay for the FDIC rule is to change that digital sign?
I have no idea, and I don't think anybody does. There's new leadership at the FDIC. If you go back, it's been a little while since I read that. When they put out that delay, and those delays, so May 1st, there's some things happening. Just a reminder, all May 1st, you had to have your policies and procedures. That's tomorrow, by the way. So that little skeleton we gave y'all, you're welcome because that'll help you get through tomorrow. But that has to be in place. You have to call a special board meeting to get that done, probably. Anyway, that has to be in place. Now, absent, you don't have to have the things that are not yet required to be included, which would be the digital stuff. That stuff is delayed until March 1st, 2026. But you have to address within your policy and procedures physical space. Hey, that signage we talked about in some of those questions earlier about the FDIC official sign and the non-deposit product signs. The ATMs and the digital stuff, that is March 1st, 2026. That doesn't need to be in your policy until then. The official advertising statement, that does, how you're going to handle that needs to be in your policy and procedure. So kind of doing a lot of things with this question here. I think the original thing was, what do we see in the future? I don't know. They mentioned putting out a revision for comment. And could that be because we have some struggles with the official digital sign? Yep, but let's all be careful what we ask for here. I know a lot of you put a lot of time, work, and energy into trying to get where to what the change that we've been working on, where they set the bar, right? If they go and change the whole thing again, then that's all for naught what we did in the last year and a half. And we don't want to change too much, probably. But could they swap out the whole thing? Possibly. I don't know. Your guess is as good as mine.
On a Reg CC case by case hold, would you ever recommend providing a reason? And is it okay to do so?
I would not ever put a reason on my case by case hold. Maybe there's some scenario out there where you would. You might want to document something internally, not required. If the customer calls, you could certainly share it, or you could give them a heads up in certain situations. But you remember, it's only a couple of days here. We're not talking about a huge amount of time, so I wouldn't.
Under Reg E, if a customer goes to a fraudulent website and enters payment information, is this unauthorized?
So I'm using the words and it's exactly how you said that, Diane. So if the customer goes to the website, and what was the word you used?
They say it's a fraudulent website.
Okay, but they go to the fraudulent website. And what's the customer do there?
They enter payment information.
They enter payment information. So who initiated the transaction? Customer did. If you've ever been to one of our programs, we've got a couple different on Reg E. We've got a in-depth disputes webinar. It's 2 hours, and we've got a brand new for the front line. That's going to be in July this year. I've never done that before, but long story short, if the customer hits the send, buy, pay now, however it is that payment information is out there and the customer's the one doing it, it's on them. That's not your responsibility. Now, if they enter in payment information, no transactions conducted, but they enter in payment information, and the person on the other side of the fraudulent website is going to take that payment information and go do subsequent transactions, those are all covered. You're responsible for covering them from a Reg E standpoint, subject to 1005.6 and 1005.11.
Under Reg DD, if we convert all accounts of one type to another, can we just provide a new account disclosure, or do we still need to highlight change terms?
Okay, so you've got some options. So Diane, you get to be the customer again because you're right in front of me all day today, right? And so Diane's a current customer and she's got an account. And we're going to completely map her account over into a new one. Now, that doesn't necessarily mean everything changes, but she was in, super good checking, and we're going to take her to great checking, or whatever we're calling it these days. And so there are some things that are going to change in Diane's account. Now, maybe everything's changing. My answer is not going to change here. So there's two ways to go about it. I can either say, all right, Diane, we're changing your account over to this other one. Here's a brand new disclosure that represents your new account. I still have to highlight the things that are changing. If you say, well, everything's changing, hey, somehow we have to describe that to her, right? But most of the time, not 100% of the information changes. So we can still give her a new account disclosure and again, highlight just those things that change. That's option one. Option two would just to be to give her a document that outlines the exact changes. Nothing needs to be highlighted then because we're only giving her the changes. So those are your options for that.
Would you recommend giving Regulation DD disclosures on business accounts or not to give those disclosures for business accounts?
I wouldn't do it. You need to give, a contract, terms and conditions, that sort of thing, but would not give them truth and savings disclosure. That's no, don't give disclosures when you don't have to in most situations.
What about your thoughts on a Reg E claim where the institution has given final credit and then the merchant gives credit as well?
I don't know if Dave's on, but he's got a soapbox on this one. Let me give you what's out there, and then we'll talk about where you might be able to go with it. So the regulation doesn't have anything, and the scenario is Diane has communicated a dispute. We investigated it. We gave her money. We said this is final. Now that word "final" is big when it comes to Reg E and the interpretations of the regulatory agencies. So I don't know. Prior to 2020, I don't remember exactly what year, the Consumer Compliance Outlook Live, which is their free webinar series, it's actually the feds, but the other regulatory agencies, they are part of it as well. It's just not underneath their label. They did I want to say it was a UDAP webinar or something like that. Anyway, this thing kind of snuck in there, and they went on record orally in this webinar and said, hey, you told Diane that the provisional credit is final and that the investigation is complete, and so she thinks it's her money. If later on you learn that she also got credited from the merchant, you said it was final, you don't get to take the money, and yep, Diane got double the fund from the investigation, right? She got her money back and then some. Hey, the Federal Reserve chimed in and said, nope, bank, you don't get to take it back. Hey, and that was kind of left. A couple years later, they actually put it in writing. So they have the Consumer Compliance Outlook Live, which is the webinar version. Then they have the Consumer Compliance Outlook, which is a written publication they put out 4 times a year. It's one of the best publications out there. If you don't get that, make sure you sign up for it. So they actually did an article and put it in writing. So now we got it in writing. We also were passed along from clients, somebody who went up the chain of command and actually went to the CFPB and the FDIC. Long story short, they came back with the same remarks. That is their interpretation that once you make it final, even though the customer is getting double the credit now, you don't get to go and pull back what they got back from the merchant. All right, that's what's all out there. I can tell you our stance is this, that we don't think that the customer should be able to double the money in this situation. And you're in many instances out what you gave the customer, Diane in this case, you're not getting your money back. Hey, and so this is an opportunity where maybe you get your money back. But I can tell you, if an examiner lands on this thing, you're probably going to have to give it back. That said, I have one other thing I want to pass along. Most banks out there are going, wait a minute, how are people even keeping track of this? We don't have time to watch to see that Diane's going to get an extra $30 back from Walmart that we gave her 2 months ago. We're not watching for that stuff. We don't have time for that. We don't have resources for that. So it's up to you if you want to try to figure out how to play that game. There's no absolute regulatory requirement. It's going to be left to the interpretation, the imagination, if you will, of whoever it is that's doing your audit, your review, your examination.
Under Reg CC, can we require a check be deposited to a savings account?
Sure, you could. A caution. I don't think you want to do this, as an absolute across the board. There are some that may call out that you're circumventing Reg CC, although it's legal circumvention of it. You need to be careful of state law, but the reason you'd want to do this is because Reg CC doesn't buy you enough time. Remember, you're only getting 7 days on an exception hold. There are things that take longer than that still in this day and age of digital and electronic, right? And so what you tell them is, hey, we'll take that for deposit as opposed to refusing it, but we're not asking you to put it in your savings account because there's no Reg CC, at least not federally, from a deposit or from a savings account standpoint. Now, I do know some banks out there that provide Reg CC protection, if you will, on their savings accounts. You don't have to do that, but you can. In that case, then you would have to follow what you say and do what you say, right? So there's a place for that. I wouldn't want to do it like consistently 100% of the time, but yeah, there's a place for it.
Do you feel a business account should get Regulation E protections just because we have the required consumer language on the statement paper?
Yeah, many banks have this. So Reg E has this thing where it says you have to annually notify customers of their error resolution liability and protections, right? And it's a statement backer. So instead of do it once a year, it's just on the back of every statement. Usually it's with a headline that says for consumer accounts. So it qualifies. And that way you can use the same paper for all of your accounts. If it's not qualified somehow, some way, and the business customer thinks that that's for them, you may have a problem on your hands. But no, just because it's on the back doesn't give them Reg E protection.
Advertising under Regulation DD, does fine print on an ad meet the clear and conspicuous standard as long as it's large enough to be legible?
Well, that last part there is the key part because it's subjective, right? I can tell you if I didn't have these on, I'm not seeing it. And I'm going to argue that it's not legible. It's not clear and conspicuous. Put these on, it's a little better, right? It's all in the eye of the beholder, right? It's a UDAP thing. I know it falls under Reg DD and Reg Z. They have that same language, but it's eye of the beholder stuff.
Under Regulation E, do we have any recourse if a third party payment provider sends a customer with an EFT dispute to us?
I wish, you wish, right? And we're not going to get our wish. Um, any hopes of that happening died with the, what was that? Was it a proposed rule or did it make it a final rule and then they killed it? It was
I
the
think it was
law.
final.
It was final. It was one of the million things they did, the previous administration in the last like 30 days of office, right? They pushed through this rule that would have pulled non-bank financial institutions to the table when it comes to things like this. And one of the first things the new administration did is they killed that rule. And so we're back to there's nobody that's doing oversight when it comes to non-banks in the payments world. And so what's going to happen now is Venmo, Cash App, Apple Pay, PayPal, you name the payment provider out there, and the ones that haven't even come up yet, right? They're going to send them to us because they know that we'll have to take care of them. There's nobody providing oversight of that. Are they supposed to? Sure, they are, but there's no oversight. There's no CFPB or some other agency to come and regulate them. And so, unfortunately, yeah, your problem.
If a customer completes an electronic funds transfer under someone else's direction, is it to be considered authorized or unauthorized under Regulation E?
Yeah, these are tough because, yeah, how much, I mean, are we talking somebody that's got a gun pointed at him? Or are we talking somebody that was, just duped or whatever? I'm going to go back to this. And this is, again, be careful what we wish for, right? Reg E needs to change because it's old. It is so far beyond the technology that we're at here today that it's just not even funny. So the regulation says if it's initiated or authorized. So again, if the customer goes and hits send, pay now, buy, hey, whether they're induced, whether they're under duress, stress, you throw the word out there you want, it's on them. It's not your responsibility. Now, again, like I answered that other question earlier, if they're simply inducing me to give them account information so they can go and then use that for other transactions, those other transactions are all covered because that's stolen information that's used for subsequent transactions. If it's just me conducting a transaction, and so Diane calls me representing fake Amazon and gets me to put my payment information in and send her money so she can pocket it and that's how she makes her living, then that's on me. That's not an unauthorized transaction because I did it. I hit the send, buy, pay now button.
Can you address funds availability delays with respect to mobile deposits? Specifically, even though not subject to Reg C, do you see institutions following those same timeframes?
I do hear of some institutions following Reg CC as it relates to the mobile deposits because they're not subject to Reg CC. They're carved out. It's going to come down to your contract again. We've had several questions like this today. Your terms and conditions. What did you spell out in there? And you should spell something out in there as far as how that works. So it's a legal thing, not a regulatory issue.
How about, do we need to have any type of consistency with funds availability delays, such as for large deposits, or do you recommend written procedures for determining when to place one?
I mean, I think you can have a roadmap to a certain degree, but there was another kind of question like this earlier too, that when it comes to there's a lot of things in compliance. You want to be consistent, right? Always do the same thing. That way we don't get in trouble. When it comes to Reg CC, that game is all about how I feel and facts and circumstances and the scenario is subjective, right? Like several of the questions here today. So while you can have a degree of a roadmap, it's not ever going to be absolute because each scenario is going to bring its own set of those facts and circumstances, and it's going to cause, the playing field and the ultimate outcome to be a little bit different in each scenario.
What are your thoughts on offering a referral fee for referring friends or family to open a specific account?
Be careful. Privacy is what comes to mind right off the top of my head. I also bonuses on accounts, possibly somewhere in there. We got a great bonus article. I don't know that's also one of our free tools out there. Maybe Diane can get or I'm sorry, Amy can get a link to that. But anyway, back to the question. So privacy was the first thing that came to my mind. So let's just say, Diane's my friend and I bank at ABC Bank and I think it's the greatest bank in the world. And I say, hey, Diane, you should really come over here and open up an account. And let's say my bank, ABC Bank, that I bank at, has this referral program where if I get somebody to come and bank at my bank, they'll give me $25 or whatever the stipend is for that. And so I tell Diane, hey, you should really bank over here. And so Diane decides to walk in someday and doesn't necessarily tell me, walks into this ABC Bank and says, hey, I'd like to open up an account. And the account rep there, and if they've been trained at all, they're gonna say, well, how'd you learn about us? And Diane's gonna say, well, I've got this friend, Jared Moyer, and he says you're the greatest bank in town and I should bank here. And so that's why I'm here. And the referral program, if it were structured like this, well, I tell you what, Jared is gonna get $25 for you open up the account if you authorize us to tell him that you opened up the account here, because I can't just send the bank can't just send me $25 without you authorizing it, because that'd be a violation of privacy. But if, Diane, you authorize it, which is always allowed under privacy, then you get to make sure that I get my $25 for you coming and banking at this bank. So as long as it's authorized, I'm fine, but you got to do training and make sure it works in that manner. If you're just sending out, blind $25 checks to people, then, and I know that I referred Diane, then I know, no, she banks there, and that's a privacy issue. Now, if you're just sending them out and I don't know who or why I got it, maybe that's not such a bad thing, but I think you'd want to know why. That doesn't make sense, I don't think. So privacy would be my issue.
Back to Regulation E, we typically handle a stop payment request for a recurring debit card transaction as a disputed transaction after the fact, but we've been told that the regulation says we should be able to process these as a stop payment. Is this true?
Yeah, that is true. What, like 3 days, something like that, but that is true. Yes. 3 days ahead of time. I think there's a time frame in there.
Under Regulation DD, if advertising a tiered rate account, is there any way around giving the rate for all the different tiers?
No, you have to give the rate for all tiers. That's a very common mistake. I want to say our review team, they're writing that up probably at least once a month as we're doing reviews, at least as it relates to those banks that have those types of accounts and do advertisements. So yeah, if you're going to advertise a tiered rate account, all the tiers have to be present.
Do you feel there are any UDAP concerns with using the fine print in advertising?
Absolutely. So UDAP, unfair, deceptive, or abusive acts or practices, that whole thing's subjective in and of itself, right? They all have their little tests. Unfair and deceptive both have three-part tests, and then abusive has this either/or scenario that's kind of in limbo with the CFPB and the guidance that they previously issued on. But the point is, it's all eye of the beholder. And so, like I said with the similar question earlier, depends on who's looking at it and who's reading it. So yeah, absolutely.
If a customer indicates they did a transaction, can we then tell them to go to the merchant first?
No. Well, wait a minute. Let me back up. So it's an authorized transaction. Sorry, it's an authorized transaction.
It sounds
So
like it. Yep.
it's not Reg E. So I guess I'm not even sure. I assumed it was not the way you read it. But so if they did the transaction, now if they're disputing the amount, so yes, I authorized it, but for a different amount, then that's covered by Reg E, and you can't make them go to the merchant. You can ask them if they've been there. Okay. But if it's just they initiated the transaction and I mean, there's missing details here, I think. So I'm assuming that it's a disputed amount. Yeah, that's covered under Reg E. You can't make them go to the merchant first. Ask them if they've been there, but can't make them go there first.
If a customer calls to close out a debit card and they mention that it's due to fraud, is it on us to ask more questions? And is that all we need to trigger the need for an investigation?
Well, I think customer service says you should ask some questions. Now, I mean, if a customer is just calling to say, I'm closing my debit card, I mean, there could be any fraud. I'm afraid of fraud, not necessarily been a victim. Oh, then there's nothing to do. Yeah, I've got some fraudulent transactions. oh, I didn't realize I'm protected. I mean, you've got to ask some questions there. I think good customer service. So just the closing of a debit card isn't enough, but you're probably not just going to have them close their debit card without having some sort of conversation, which ultimately probably leads you in the way this one's framed up to a dispute notice on record.
Is Saturday to be considered a business day for providing provisional credit under Reg E?
Okay, so Reg E can be tricky. They use the terms uh, days and then business days. When they're talking just days, then it's calendar days. If they use the term business days, then you have to say, all right, what are we open? So let's take Saturday, for example, what this question's about, right? What Reg E says about Saturdays is if you're open for substantially all business functions, meaning that we're running, we're running bank proof, all that stuff. We're a fully serviced open bank on Saturdays. Not just come in and see us have coffee. You can make a deposit, you can speak to a lender, but we're not running things. We don't have operations going today. Hey, then Saturday's not a business day for you. But if you're fully open on Saturday, then it is a business day. So that comes down to, are you open for substantially all business functions? If so, then Saturday's a business day. So the question, I think, was for provisional credit, are we talking about Saturdays? Maybe, because it uses the term business day.
Under Regulation DD, what is the retention for a change in terms notice?
2 years. Reg E would be the same, 2 years.
Under Regulation E, can you discuss if something is unauthorized because someone's authorization was exceeded? For example, if I give my card to my son to get gas, but my son spends beyond that, or even gives the card to someone else, can we say everything is authorized?
Okay, so there's no such thing as evergreen usage where I just gave it to somebody forever. So let's kind of use that scenario in the question. So I've got a 17-year-old. I've done this. I've given him my card for gas, and I don't think he's ever used it beyond what I told him to. But let's pretend he did. So I give him my card. I say, go pick up gas. Now I know what you're all doing. Before we even get into the story, you're all jumping up, going down. We've got it right here in our terms and conditions. It says right here, don't ever give your card to somebody else. We can't do that. We can hold it against them, right? And the answer is no. You can't do that. Okay, you can put it in there, and every attorney is going to tell you to do so. But when the transaction's unauthorized, hey, and in certain circumstances, you're not going to be able to not do the investigation, not give the money back because of what's in the contract. Your contract can't go above and beyond what the law and the regulation states. All right, so back to my story. Give my 17-year-old my card so he can go put gas in his truck. And while he's got my card, he's filled up the truck with gas. He's like, I got dad's card, and there's a shopping mall, there's a whatever and a whatever, and there's a Chick-fil-A, a Burger King, whatever on the way home, and I'm going to stop there and get some other things while I'm on the way because I got dad's card. And so he does that and comes back to me, doesn't tell me about any of that, gives me my card back in my possession. Okay. And the month goes on, and I get my statement, and like a good bank customer, I read my statement every month. I really don't. Most of your customers don't either, but I'm going to read my statement so I can fulfill statement plus 60, get the best protections I can. If you don't know what that is, we got a Reg E webinar that you need to take into. But I read my statement, I go, I didn't eat at Burger King. I didn't eat at Chick-fil-A. I didn't buy this, that, but I did, there's a gas thing here right beforehand. And so I call the bank and say, hey, I didn't do these. Well, did you have your card the entire time? Well, no, I did let my son go use it. Well, did he do them? And so maybe I have to go have that conversation. But let's say he lies and says, I didn't do it. And we're not able to figure out at that point, who did these transactions. On the surface right now, they're unauthorized. Now, there's a thing in Reg E that says when I give the card, I have now given them authorization to do whatever with that card till I get it back in my possession. So from a Reg E standpoint, and this is good for all of you, the Burger King, the Chick-fil-A, the extra stuff he did while he was out buying gas, that's on me, the customer, because I gave him the card, I authorized it. Even though I only authorized the gas, when I gave my card up, okay, anything while that card's not in my possession until I get it back is authorized. Okay, so when I call up and say, hey, I didn't authorize this, you can say, Jared, you gave the card to your son, right? Yep. Well, he spent that money and you wasn't supposed to. Yep. Well, that's on you because you gave the card up. Okay, until you get it back, they can't be unauthorized. Now, let's play this out. I get my card back. Okay, we go through this little song and dance. And then later on, he decides not to ask me takes the card, lifts it from my wallet, and goes does things on his own, those will be unauthorized because I didn't give him the card to go do things. Okay, so that's a short version of what's going on in Reg E. This is actually good for you banks. Okay, while the card's out of the customer's possession and they've authorized it, those transactions, whether they actually agreed to them or not, are authorized. They get the card back and something happens again without authorizations, those would be unauthorized transactions.
What type of signage would be required for an employee who opens insured deposit accounts and also offers non deposit products? Do they need to physically move offices depending on the service being offered?
So there is the space or physical limitations language in the Q&As, not in the regulation, in the Q&As, that said if you have space limitations, you might be able to commingle these things happening in the same area. But aside from that, hey, there needs to be an area where we do non-deposit products. And then there has to be separation. They talk about walls and planters and furniture and other weird things that might make things look like they're in a separate place, right? Okay, that's what needs to happen. Now, you don't need to go build new offices, but if you've got the deposit person sitting right next to the insurance agent, and you've got empty offices over here, you probably need to split them up. Okay, and so things like that need to be taken into account. Now, how hard and fast are they going to look at this? I don't know. Will some of this be rewritten to relax it? I don't know, maybe, possibly. But I mean, they went out of their way to put Q&As out to explain this is what we mean, and then they threw you kind of a bone that says physical limitations could be a factor. That's going to be subjective.
Is the non deposit product signage required by an insurance company renting space at a bank?
Yeah, if it's your bank and you've let them into your area, hey, they will have to comply with the non-deposit product signage. Absolutely. And the areas and the physical space, the physical premises, which again, that went into effect or goes into effect tomorrow.
Back to Regulation E. If I have Venmo and have paid a person in the past but dispute subsequent transactions, are they considered unauthorized?
Now, just because I've paid somebody, I mean, Diane, we've gone in on different things at work here where I've had to send you a Venmo, a Cash App, or something. Just because I paid you in the past doesn't mean that a future transaction might be unauthorized. You know, that could happen. Just because I've shopped at Walmart before doesn't mean that I can't have an unauthorized transaction at Walmart. Now, those things do get taken into consideration in investigations. They do carry some weight, no question, but they're not the end all be all. No, they're not.
Under Regulation DD, is there a tolerance for an annual percentage yield to be considered accurate?
I think it's one, 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 1/20th. Does that sound right? 1.05, right?
All right. That sounds right. Yep.
Okay.
Under Regulation E, if a customer emails us details of a dispute, does that count as written notice? And or can we require notice be on our form?
So Reggie says orally or in writing, leaves it at that. In fact, we had a team meeting, what, about a year ago on this, Diane, where I'm going to go further than just email, chat. Okay, the chat on your screen, and most banks have that these days, right? A lot of them do anyway. Somebody brings it up in chat. Are we now notified? Somebody brings it up at the teller line. Are we unnoticed? Yeah, I think so. Orally in writing. You can't make them be funneled a certain way. Hey, orally or in writing, you're on the clock now. Hey, and when I say on the clock, that's 10:05.11. Okay. If it's not 10:05.11, it's 10:05.6. You're not on the clock, but you got to start and investigate promptly. If you don't know what those things are, I don't have time today, but we've got 2 different webinars, depending on the depth you want to get into that, to get into Reg E. Would love to have you take those in.
If we contact a customer regarding a suspicious transaction before it is final and the customer indicates it's valid, can the customer later claim it is in fact unauthorized? Or can we use that initial conversation as part of our investigation to say it is authorized?
So, well, there's a lot of different ways we can go about this. So, there's a lot of you out there that have these fraud alerts and fraud providers, whether they're housed internally or they're a third party, that will kind of, I know I've had them, press C to confirm that you did this transaction. I get that text once in a while from my bank, and these are great. I might confirm the transaction because it sounds like it was something I did. And then later on go, oh, wait a minute, you know what? I didn't do that. That's okay. Just because I hit the C today or I get the phone call and go, yeah, yeah, doesn't mean that I can't look into it later and go, oh, you know what? Nah. That's not an open and shut case. I never initiated a dispute. You tried to get out ahead of it, which is great. You can do that to try to lessen the loss on your side. But that doesn't mean when I come back later and go, you know what? That's really not mine. Hey, that you don't have to investigate it. So that doesn't get you out of the woods on that one. Sorry.
You touched on this earlier in connection with the FDIC policies and procedures, but since the FDIC digital logo compliance date was moved, does the policy still need to be revised by May 1st? And if so, would it be sufficient to just mention that we will address those requirements by the due date?
Yeah, so the last part of that's going to be important. The answer would be yes to that. Again, we've got a free tool out there. I'm sure Amy's shared this already, but it's a checklist. And one of the cool things about this checklist is we put dates on it with respect to the different parts of the FDIC rules and when they have to be accounted for from a mandatory compliance date. So the policies and procedures, just in general, have to be put in place by tomorrow, May 1st. However, within the policy and procedures, you do not need to yet address digital signage or ATMs. Okay, you could have it the policy and procedures exclude that language until March 1st of next year, or as this question stated, that'll be taken care of at a later date. That's fine, but there are certain things that as of tomorrow need to be in place, which means y'all better, if you don't have something, be calling a board meeting for tomorrow so you can get this done, right?
Under Regulation DD's requirement for consistent terminology, can we
Yeah.
spell out non-sufficient funds fee in some place and abbreviate it as NSF in others?
Yeah, that's a no-go. So Reg DD has consistent terminology and non-sufficient funds fee and NSF. I know all of us sitting here at the table today, we know what those two things are, that they're the same thing, but the world doesn't know that. And the world gets to be ignorant and not and claim I didn't get it. And so though that's not close enough. And that's just Reg DD. We can couple this with UDAP too, unfair, deceptive, or abusive acts or practices. That can also be pulled to the table. So yeah, don't do that. Not a good idea.
FDIC and advertising. We currently are in the practice of putting the member FDIC logo, equal housing, and NMLS number on all our marketing. Is this an acceptable practice? And if not, can you point to any guidance on how to better align with the requirements?
Okay, so the equal housing lender, I don't have a problem with you doing like overload on that on everything. The what were the three things? Remember FDIC
The
equal housing?
the NMLS
Oh,
number.
NML. So equal housing lender and NMLS. If you want to splatter that on everything that you got a bank name on, I'm fine with that. The member FDIC. Okay, the general rule is that you include it on anytime you use the bank's name. But remember, because of the new FDIC rules now, we have specific prohibitions where it can't be. Some of those were there before. So you can't just sprinkle FDIC, member FDIC on everything and think you're okay. There are certain places it just straight up can't be, like non-deposit products. And I just looked at the clock, Diane. I can't believe we are already 2 minutes out from the top of the hour. This has been a blast. Before everybody goes, don't run out the door just yet. I got a couple things here. So I got 800 and some people still on screen. Stay with me if you will. The 2 minutes I need here to close things out. I'm going to share my screen with you. I got exciting things I want to share. All right. So if you were here in the first part of the program, we mentioned that we have something coming up, but let me do this first. First off, okay, you can already register for our next forum. We do 4 of these a year. Okay, the first 3 are Q&A. We did lending in January. Today we knocked the deposit ones out of the park here. We are going to be doing BSA AMO. Actually, Kevin is going to be tackling that in July. You can already register for that. So that is available on our website. And then in the fourth quarter this year, we'll be doing the one's a little bit different. It's a look back on what lies ahead, kind of acts like a checklist for the year that was and gives you some insight into what's up around the corner, kind of on the horizon. So that's coming. That's not the most exciting thing I've got to share here with you. That's exciting, but you are all the first to hear about our 2025 Virtual Compliance Conference Series. We just opened that up during this program here today. So we're going to be doing a 1-day deposit, a 2-day lending, and a 1-day BSA AML. You can buy them each separately. If you only want to come to this, only want to come to that, great. We've made that available to you. If you want to come to all 3, we're going to give you a heck of a deal. Look at the discounted price there. Okay, add up the 3, you'll see it's well discounted. We're also going to throw some extra information at you this year. When it comes to this series, If you buy the $9.99 one where you get all of it, you're going to get some extra stuff. You're going to get a extra session on compliance management, that bonus session. Okay, that'll happen at the end of the first day in the lending conference, but only those that buy the entire series are going to get that bonus session. And so a little extra value there if you purchase all three of them. Now, what if you only want to come to the deposit and you still want that CMS session? You can buy it a la carte. It'll be available there as well, but you get it at no extra cost if you come to the whole series. Just like any webinar that we do, one registration gets your whole team trained. We don't charge for extra locations or anything like that. So your bank buys, your financial institution buys a seat. It's a seat for everybody in your institution. We're also going to sprinkle in some trivia, brand new fun part of the compliance conference series. We're still trying to work all that out, but we're going to hope that you're going to be able to keep track of your score, compete against your teammates, and see how your compliance knowledge stacks up. We're going to do that kind of over the lunch hour. So you're the first to all hear about that. Get the date saved, and you can register as soon as you'd like to. We had over 200 plus financial institutions across the country that partake in that last year, and would love to have you this year. That's a QR code, by the way, on the screen if you want more information. All right, to close out our Q&A here today, first off, thank you for coming by and taking in some deposit compliance Q&A today. The goal was as many questions as we could get in the hour. I don't know what number we hit. It had to be somewhere between 50 and 70, but we got to a lot, and I know we didn't even come close to touching the number of Q&As that came in. That said, we're going to ask you to give us just a little information today. 5 short questions. There's a survey coming out. It'll take you less than a minute. Okay. As we close out here, I want to thank my team, Amy and Kyla, for working the chat. Diane, fabulous job moderating. And I know the rest of the team was taking care of all of you for whether it's calls coming in, reviews that we're doing, consultations, other training sessions. So total team effort here today. Thank you, team, for all of that. With that, I'm going to let all of you get back to what you do so well, and that's serving your customers. We'll see you again soon.